For today's Business Brief, we're joined by the Managing Director at Market Economics, Stephen Koukoulas. Stephen, mixed views as to whether the RBA should or shouldn't cut rates today. I know you believe they should, but the likelihood is that they will indeed cut rates later today, the first time in 3 years.
First time in almost 3 years, and it's the world's worst kept secret. I don't think there's anybody seriously thinking that they won't go. RBA Governor Phil Lowe mentioned a couple of weeks ago at a speech that a rate cut's on the table for the board to consider, and I'm assuming the board will rubber stamp that decision. We do know that inflation's very low, the unemployment rate's starting to rise, and even yesterday we saw some pretty ordinary numbers coming out on the economy. So it's because the economy's a little softer, needs a bit of a shot in the arm, and I think that's why they're going to do it.
Why is the argument, and why will the RBA decide to cut rates today? You know, it doesn't have that many levers to pull on, so why not let the results of the election flow through, see how it goes for a couple of months or at least a month?
Look, yeah, there's that argument has some validity, but again, it's information there that the RBA would have known about. Both sides of politics were promising tax cuts in the near term, and of course they're just trying to manage the near term. We're not worried about what's the economy doing in a couple of years' time. So they sort of would have known that anyway. But I think the momentum that's just been lost in terms of weak consumer spending is very, very weak. We saw job ads falling very sharply yesterday, and of course we've got to overlay all of our domestic concerns with what's happening in the global economy. And dare I say it again, I think we mention this just about every week, the US-China trade wars are still unfolding. The Chinese economy's taken a bit of a step lower, and even the US, which was the strong man of the global economy, is now again starting to show signs of weakness. In that sort of environment, the global conditions for us are not going to be quite as positive as perhaps we thought they were, or the Reserve Bank thought they were at the start of the year.
And what's happening with the Aussie dollar? Normally when there is a rate cut, the Aussie dollar should fall, and that's what the RBA wants.
Well, we've actually shot up overnight. We're just a touch under 70 cents. And again, well, that's what I was just sort of alluding to. The US now is factoring rate cuts in the United States. So it's not just the Reserve Bank of Australia that are moving to lower rates. The US Federal Reserve's lowering rates. So we've got this tug of war, if you like, between who's going to be cutting more over the next 6 months, Australia or the US. So the US dollar actually took a hit, and the Aussie dollar got a bit of a tailwind behind it.
And you're keeping a close eye, Stephen, on commodity prices, edging just that little bit lower. Are you a bit worried about this, or not just yet?
Yeah, look, the commodity prices, the iron ore price in particular was stunningly strong. That mining disaster in Brazil with Vale, the big mining company there, caused about 10 to 15% of global production to stop. Now, for we in Australia, that was fortuitous in terms of the price that was being achieved. But now we're seeing the Vale mine being repaired. It's about to get into production again. So the iron ore price is coming off. We know that oil prices are back down. Coal prices are just coming off. So while we're exporting lots of tonnages of these things, the price we're getting is just coming off. Not a concern yet, but it's something that I'm sure RBA and our friends in Treasury will be looking at.